let's go over to this tweet from my good buddy Doomberg. And he says, my thoughts on this guy, talking about Saylor, have always been and only been limited to the prudence of using his publicly traded company as a vehicle for a leveraged bet on a dollar price of Bitcoin. And I responded by saying, my thoughts have always been limited to him telling people to mortgage their house to buy Bitcoin. No matter how bullish you are on something, that is totally inexcusable. Boggles my mind. Bitcoin community has given him a free pass.
In this video, George Gammon reviews the recent Twitter debate with Michael Saylor and him. It all started when Gammon reminded Twitter that when Bitcoin was nearing its peak at $57,000 in March 2021, Michael Saylor recommended to his followers that people should be mortgaging their homes to buy Bitcoin. However, if you had followed his advice, today you'd be down 70% and facing a ton of debt and even bankruptcy. This led to a heated argument between Saylor and Gammon on Twitter, where Saylor attempted to defend his irresponsible suggestion. While Michael Saylor has definitely been a force for good in the Bitcoin community, this is definitely a blemish on his record and a reminder that he is not a financial advisor and that his advice should be taken with a grain of salt. Now, let's check out this epic Twitter debate.
So then Saylor chimes in and says, this is a malicious distortion of crypto promoters' intent on undermining Bitcoin. The assertions are created by their marketing departments and amplified through Twitter via their bot armies in the hope that real people like you, he's talking to me, will repeat them and legitimize the lie. He says, if you review my interviews, you'll see that my comments with regard to credit and property are more nuanced. In the event of financial repression or hyperinflation, it is unwise to sell scarce appreciating property in order to pay off low interest rate long-term mortgage. So at this point, I read this and I understood what he was saying, but I didn't realize he was disputing the fact that he said this in the first place. And this meaning, take out a mortgage to buy Bitcoin. And here's how I respond. I said, my issue is, even with nuance, it's a huge gamble because the asset you are purchasing, i.e. Bitcoin, doesn't throw off cash flow to service the debt while you wait for inflation, and the bet only pays off if the asset you buy goes up with the rate of inflation, which is far from certain. So what I'm saying here is you're taking on an additional payment every month in the form of a mortgage. So if you borrow, let's say $100,000, or if you leverage your house, let's say you got 100% equity, you borrow against your house $100,000 to buy Bitcoin. Well, now all of a sudden you've got let's just call it $1,000 a month payment. And you've got to take that out of your income. So you use that to buy Bitcoin. Now, Bitcoin doesn't pay you to own it. There's no cash flow. There's no dividend. There's no rent check coming in. So now all of a sudden that mortgage payment, you got to pay that out of pocket. And the pushback would be, well, who cares? Because Bitcoin is going to go up so much when we get all this quote unquote money printing that even if you can't afford to make the mortgage payments anymore, you can just sell your Bitcoin at a huge profit and you're going to be better off. And you see the error in the thinking there. Number one, they're thinking in terms of certainties, not probabilities. And it is not 100% guarantee that Bitcoin goes up, even with the rate of inflation. So you're taking a huge risk, right? And I pointed out further in this next tweet, that's an example. I said, someone takes out a mortgage to buy Bitcoin, but can't afford to service the debt long-term. Idea is Bitcoin will exceed rate of inflation, and there's a 100% chance of inflation. This is them talking, not me. So I'll be fine because I can always sell Bitcoin to cover debt service, meaning those monthly mortgage payments. Then we have inflation, and this happens. So I point out a chart where in December 2021, or since that time, inflation has been at a minimum of 7%. We would say, I don't know if 7% is the number, but when we get up to 8 and 9, this is all-time high inflation going back 40 years. You have to go back to the early 80s, late 70s to see this level of inflation. So at any point in time, if your argument is that Bitcoin is always going to do well in an inflationary environment because of Gresham's law as an example, where people are going to get rid of their dollars and buy Bitcoin because the dollar is being devalued. Well, we should have seen that happen to a certain degree during this time frame. You say, George, well, gold didn't go up that much. Oh, right, but you're pricing gold in dollars. Let's look at gold denominated in yen. Let's look at gold denominated in euros or Colombian pesos, for heaven's sakes. And then you would most likely see gold go up at a very similar rate than compared to the overall inflation that we're experiencing globally. It's just with the dollar that it didn't go up. And I would argue because it ran quite extensively before then. But even if it didn't, you're looking at a 5,000 year time frame here, where Bitcoin, maybe in the next 5,000 years, we'll see that it is a good inflation hedge. But you just don't know that just because of what the price has done over the last 10 years. It'd be like assuming that Tesla is a good inflation hedge just because it's done better than the CPI over the last 5 years. But I don't think anyone would argue that it would be a good idea for you to mortgage your house to buy Tesla shares. So during this time frame, when theoretically, if you would have listened to the Bitcoiners back in 2021, Bitcoin should have exploded higher, should have just skyrocketed in all currencies, not just the dollar. But then we have Bitcoin go down from, let's call it 50 to where it is today at 16, right? So, and again, you could say, well, gold didn't really keep up, right? But gold didn't lose, 60, 70% of its value, for heaven's sakes. And I have never, ever, and you guys know this well, I would never tell anyone to mortgage their house to buy pretty much anything, especially not gold, for heaven's sakes. No way, absolutely not. The only thing I've ever said for people who say, hey, should I mortgage my house if I really want to invest? I said, I would advise against it. But if you have to do it, you got to make sure that you buy an asset that pays you enough to cover your mortgage cost plus some. So as an example, if you had a house, you had 100% equity, and you're like, I want to buy a rental property. So I'm going to go borrow against my main house to buy the rental property, but your mortgage payment's $1,000 and the positive cash flow coming in from the rental property is $2,000. Okay, you got to be careful with that. You got to make sure that you're a pro and you know what you're doing. But that is something that I would personally consider for my own portfolio. Buying gold or Bitcoin or something like that doesn't pay you to own it, that is completely out of the question. And that was my point. And you can see why. Because for the retail investor to do that, they're going to get caught with their pants down, meaning that they're going to have to keep making this monthly payment. And all of a sudden, they're going to say, holy cow, it's just like buying a property with negative cash flow, just assuming that the appreciation is going to go up. Well, what if it doesn't? Well, now all of a sudden, you're left with this payment that you can't make, and the price of your asset goes down by 60%. And you have no other choice but to fire sell it and realize the loss. That's the risk here. And that's what I'm pushing back against. Now, Saylor chimes in here and he says, I have not recommended that people take out a mortgage to buy Bitcoin. So I don't dispute your point. I've noted when mortgage rates are at 100-year lows, let's say 2.7% for a 30-year, that perhaps it is unwise to pay those mortgages off early by selling scarce, desirable assets. So here, if this, maybe all these videos of him saying that are wrong. And hey, I'm going to give him the benefit of the doubt here. If all he is saying is that maybe you think twice about paying off the existing 30-year mortgage you have on your house or your rental property, I would not dispute this. And so then I come back and say, right here, and I'm trying to take the high road. I apologize if I misrepresented your views. And in fact, I'm glad to be wrong. If I found out that Michael Saylor never, ever went on record, never did a video where he said, mortgage your house to buy Bitcoin, and that was all just kind of tricky editing, there would be no one that would be more happy than I would, saying, okay, great. This is good that we've got someone that's this influential, not only in the Bitcoin community, but in the financial media space that retail investors are really looking up to. And it's fantastic that he's not saying these things that I would consider dangerous, if you want to use that term, or at the very least, irresponsible. I'll just go ahead and give you the punchline. After this, Saylor said, basically kind of waving the white flag, saying, hey, I'd love to sit down and talk about it. Let me know if you're open to it. And I tweeted back at him and said, yes, I think that'd be fantastic. So I invited him on the show. And to make a long story short, Doomberg is actually going to be joining us. I guess kind of how we're going to set this up. It's going to be a little bit of a debate discussion between myself and Michael Saylor. And then Doomberg is going to be on the live stream, assuming we live stream it, to add his 2 cents and then to maybe moderate the discussion / debate between Michael Saylor and me.
I highly recommend you watch this video where George Gammon explains why inflation is actually essential for a healthy economy. Click here to watch the video.